Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Universal Display Corporation Annual Report. Universal Display Corporation offers a diverse range of businesses and services that cater to various industries. At its core, the company specializes in the research, development, and commercialization of organic light emitting diode (OLED) technologies and materials for display and solid-state lighting applications. The company's product offerings include PHOLED technologies and materials under the Universal PHOLED brand, which are used in displays and lighting products. Additionally, it provides FOLED, a type of flexible OLED that can be fabricated on flexible substrates, as well as OVJP, an organic vapor jet printing technology. Beyond its product portfolio, Universal Display Corporation also offers various services to support the commercialization of OLED products. These include technology development and support services, such as third-party collaboration and contract research services in areas like chemical synthesis research and development. The company also engages in intellectual property and technology licensing activities, further expanding its reach into various industries. With operations in multiple countries including South Korea, China, Japan, the United States, and internationally, Universal Display Corporation has established itself as a global leader in OLED technologies and materials. The stock price of Universal Display Corp has significantly dropped by over 33% in the past year, with a notable decline of 33.99% around February 20, 2026. The main cause of this downturn was the company's weak full-year 2026 revenue guidance, released on February 19, 2026. This projection fell short of analysts' expectations, leading to a sharp sell-off and a new 52-week low. The disappointing guidance was further exacerbated by analyst downgrades and price target trims. Needham & Company LLC lowered its price target from $150 to $145, while Wall Street Zen downgraded the stock from hold to sell. These negative assessments contributed to the decline in Universal Display's stock price. Additionally, the company's third quarter 2025 results missed Wall Street's expectations, with revenue declining 13.6% year-over-year and earnings per share falling 21.6% below analyst estimates. This led to a further drop in the stock price on November 7, 2025. The broader semiconductor and display technology sector also experienced weakness, which added to the negative sentiment surrounding Universal Display's stock. Concerns over the company's high valuation and negative quantitative ratings further contributed to the decline in its stock price. Universal Display Corporation maintains a market capitalization of $5 billion, broadly in line with the industry peer group. Universal Display Corporation trades at a lower price-to-earnings ratio of 22 times and a higher price-to-book ratio of 2.79 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 12% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. The primary drivers of revenue growth or decline in the company's financial performance can be identified from various sources. On the positive side, sales of OLED materials for evaluation, development, and commercial manufacturing have been a significant contributor to revenue growth. Additionally, intellectual property and technology licensing, contract research services, long-term agreements with customers, and sales of PHOLED emitter materials have also contributed to the company's revenue growth. On the other hand, several factors have led to revenue decline. Decreased sales of products incorporating company technology or materials, loss of licensees due to adverse effects on royalty arrangements, increased costs associated with defending against claims and potential damages, competition from alternative technologies such as LCD and micro-LED, and advancements in competing display technologies have all contributed to the decline in revenue. Neutral factors that have had little impact on revenue growth or decline include economic downturns and fluctuations in demand for displays and solid-state lighting products, customers developing new or more efficient manufacturing processes, and epidemics, pandemics, and public health crises affecting global economy and consumer spending. The net income of the company experienced a significant fluctuation over the 2-year period. Initially, it decreased due to various external factors such as inflationary pressures, uncertain availability of critical materials, and geopolitical risks. However, in 2025, there was a notable increase of $19,996, 9% increase, from $222,079 in 2024 to $242,075. This upward trend continued with an additional increase of $3.3 million due to a cumulative catch-up adjustment. In contrast, the profit margins showed a downward trend. Initially, they decreased due to increased production costs, inventory obsolescence risk, and supply chain disruptions. Later, there was a further decrease of $2,738, 0.6% decrease, from $499,223 to $496,485. The gross margin also declined by 1%, from 77% to 76%, due to decreased revenue from material sales and increased cost of sales. The reasons for these changes are largely attributed to external factors such as inflationary pressures, geopolitical risks, and supply chain disruptions. Additionally, the company faced concerns over political instability, trade conflicts, potential regulatory requirements, and natural disasters or unforeseen catastrophic events. The cumulative catch-up adjustment also played a significant role in the net income increase. The company's financial performance has been a notable aspect of its overall success. A key indicator of this is the generation of positive operating cash flow, which reflects the company's ability to generate profits from its core operations. In recent years, the company has consistently demonstrated a strong capacity for generating positive operating cash flow. For instance, in 2025, the company reported an operating cash flow of $210.8 million, indicating a healthy financial position. Similarly, in 2024, the company's operating cash flow stood at $253.7 million, further underscoring its ability to generate significant profits from its core operations. The consistent generation of positive operating cash flow is a testament to the company's efficient management and effective operational strategies. This trend suggests that the company is well-positioned to continue delivering strong financial performance in the future. Management is confident in the future prospects of the company, citing the growing adoption of OLEDs due to their advantages over competing display technologies. The company plans to capitalize on this trend by developing new OLED materials and selling them to product manufacturers, while also investing in proprietary technologies and research partnerships. Key to the company's success will be its ability to innovate and adapt to changing market conditions, including maintaining strategic relationships with OLED manufacturers and collaborating on next-generation technologies. Management is committed to creating a diverse workforce and acknowledges potential risks such as pandemics and cyberattacks that could impact operations. The company's strategy focuses on expanding its portfolio of PHOLED technologies and materials, while also developing next-generation organic technologies. By offering cost-competitive pricing for OLED materials and technologies, the company aims to maintain its competitive edge in the market. Overall, management is optimistic about the company's outlook, but also recognizes the need to navigate potential risks and challenges. The company has made several strategic acquisitions and divestitures over the years to expand its operations and optimize its business. Acquisitions have been a key part of the company's growth strategy, with notable purchases including Kodak's OLED assets in 2009, CDT in 2007, and Shannon Industrial Estate in Ireland in September 2023. The company has also acquired Adhesius Inc., in 2016, OVJP Corporation in 2020, and Universal Vapor Jet Corporation T. Limited, UVJC, in Singapore. Additionally, the company leased an application center in South Korea beginning in 2017 and purchased it in May 2023. On the other hand, the company has also made divestitures to streamline its operations. One notable example is the closure of OVJP Corp's facility in California in December 2024. This move suggests that the company is focusing on more efficient and cost-effective operations. The company has demonstrated its commitment to returning value to shareholders through two key initiatives, paying dividends and buying back shares. In terms of dividend payments, the company has a clear history of declaring and paying cash dividends on common stock. This practice was observed in 2023, 2024, and 2025, with a notable payment of $9.4 million made in 2025. These regular dividend payouts indicate that the company is prioritizing shareholder returns. In addition to dividend payments, the company has also been actively buying back shares. In 2025 alone, it purchased 291,210,000 shares under its share repurchase program, which was authorized for up to $100 million of common stock purchase. This significant investment in share buybacks suggests that the company is confident in its financial position and is committed to enhancing shareholder value through this means. That concludes the financial summary for Universal Display Corporation. Feel free to comment below, and I will be happy to answer them when possible.